Ladies and gentlemen, welcome to our Lunch and Learn workshop. It's the second in our series for 2023. It's fantastic to have all you guys back. I know we've got a number of firms joining us with their team, so thank you. Look, this is a new little value add from Professional Partners Education. Our Lunch and Learn series started off last year in 2022, and we've continued it on for 2023. If you don't know my name, it's Paul Jansz, and we are here thanks to our friends at Professional Partners Education, Hall Chadwick, Profitmaster Global, iKeep, and Lloyds Auctioneers. Now, if you've been invited and you're joining us for the first time, or you're coming back for this particular topic as well, you've been invited because Danielle Morrison has probably invited you, as you've been a part of our Hall Chadwick and Professional Partners Education family, let's call it. You've been to one of our lunches, you've been to one of our shows. And again, it's great to have you guys here. And I know that a lot of the firms that are joining us online have also got team members joining. So it's great little, call it monthly learning. We do this on the second Tuesday of every month, subject to public holidays and all those sorts of things. So we are here as a part of this series. If you've missed anything in the past as well as last year, I suppose that technically is in the past, you just jump into our YouTube channel, type in Professional Partners Education, and you'll see all of our not only our non-technical training, which we provide free to our accounting community. So you see all my live shows, my podcast, as well as that, you'll also see all these lunch and learns, which is the technical side of what we do. And we've usually got one of our Hall Chadwick partners to join me. And today's no different. So let me introduce you to our special guest. It's Brett Young. Brett's one of our Sydney partners from Hall Chadwick in Sydney. Brett, welcome to our Lunch and Learn workshop.
Yeah, Paul, thanks for inviting me today. Delighted to be with the group, and hopefully we can make this a really good, engaging and practical session this afternoon.
Brilliant. And we were talking offline, and we're going to share some really good things around. Let me just quickly go into what we're going to go into. So we're going to talk about DPNs, director penalty notices. And funnily enough, I spoke to someone this morning. It's a business, and I'll give you an example of, call it the strong arm tactics, as we can probably label it from the ATO, and I'd love to get your thoughts, and we can share that with everybody online as well. We'll talk about tax disputes in Australia. We'll talk about some boosts. So there's a technology investment boost, and there's an Australian digital games tax offset as well. That's a mouthful. So we're going to talk about those in a little bit of detail. We'll run for about 35, 40 minutes. Look, if you've got questions, please drop them into the Q&A. So as we go, we'll cover the questions because there may be some things that you want to cover off, but we've definitely allowed time for questions at the end. So if you've got any questions, please drop them into the Q&A. Brett, before we commence, maybe it's a great opportunity to share a little bit about you, if that's okay, before we jump into our topics, our 4 key topics.
Sounds good, Paul. Look, I'm a recent member of Hall Chadwick as a partner in the Sydney office. And for the last 2 decades, I've actually been a practicing barrister at the New South Wales Bar, and then saw the light one day that I sat there and it took me a number of years to sort of work out that resolving taxpayers' tax disputes, today we're going to be talking about largely probably director penalty notices, it's actually more efficient, it's easier. Clients are happier the earlier you can intervene into a dispute and resolve it. And at the end of the day, it's probably one of the things I've sort of done over many decades, is to look after people in dispute situations and resolve their disputes effectively, efficiently, and obviously quickly. So it's with those sort of skills, coming back in as a chartered accountant as well, back into the profession after many years of absence. It's great to be back, and it's great to be part of an awesome team at Hall Chadwick. I've been incredibly impressed with all the partners. They're all very can-do, hands-on, no-nonsense people that just get things done for clients. So that's hopefully part of the network that Paul's obviously creating with this professional education program. So you know what we do. One of my areas of expertise is obviously resolving tax disputes.
Yeah, fantastic.
Back to you, Paul.
Thanks, mate. And it's great to have you. I know that we tried to get you on last year as well, and then Christmas hit, and before you know it, we're in mid-March, and everyone goes, how the heck did we get to mid-March?
Absolutely.
But you're right. One of the great things about Hall Chadwick and what they do as well is, and that's one of the great things we've tried to do really hard with a number of firms we work with, whether that be at our lunches and you've come to our lunches or whatever it may be, is to jump in early and have that conversation with your clients there's no doubt we're probably the number one restructuring firm in that VA situation. Let us get in there early. Let us talk to the directors. To all you accounting firms and as part of our accounting community online, that doesn't cost you anything. Okay, so the ability to jump in early, get some advice, have our specialists, have our partners actually speak to your clients, the directors of the businesses, and just ideally give them some thought-provoking ideas. They're after solutions. Okay, we've spoken about this a lot at our number of our lunches. Most of the directors of companies are after solutions. And we've got some great people that can actually provide fantastic solutions. And to you guys, it's a value add. And we'd like to believe that's what we're here for. So let's get into today, mate. Let's talk about director penalty notices. And I'll share the story that I mentioned before as well. Now, there's a lot of chat about this with the ATO issuing DPNs. One, what's the latest sort of activity that you're aware of? And I'll tell you something, obviously, I heard this morning. And two, what's some of the practical steps that a director could take if a company was to be issued with a DPN?
Yeah, look, thanks, Paul. I think 23, it's basically back to normal. We're back to 2018, 2019. I think 22 last year was a transitional year. The ATO started in May of last year. They've had 2 waves of issuing director penalty notices in large batches. And now I think it's just back to sort of a 2019 standard approach where the ATO are just issuing them on a weekly basis. And I think that some of the key steps to take are maintaining interaction with the ATO as much as you can, and obviously reviewing your payment arrangements. Perhaps we can have a chat about the payment arrangement, Paul, that you just we came across just recently.
Yeah, for sure. And I think I know when we had, I think last year we had another one of our Sydney partners, Kathleen Boris, shout out to Kathleen. We were sort of, one of the biggest things that we spoke about was the ability to communicate with the ATO. So let me share this one because it was only this morning. This particular business has been paying about $10,000 a month in tax with their old tax, let's call it. They got a call yesterday, I believe, from the tax office, and it was, well, that arrangement is now over. So what they are looking for is they're looking for about $3,600 to be paid a week. So it goes from 10 to, let's call it 16 a month. And obviously that's tough from a cash flow point of view. He said to me, the director said, look, I was on the phone for about an hour and a half trying to run through a fair few different scenarios. But basically they said, if you cannot pay, let's call it the 16 a month, you will be issued with a DPN. And then when you receive the DPN, you will then have to negotiate a different deal to what you can pay with the ATO. So I suppose, call it a bit of a scare tactic. They rang me this morning and said, PJ, what do you think? I said, well, I prefer them talk to you, to be honest with you, Brett. So, but again, this only happened like an hour ago. So I thought, well, hot off the press. Yeah. What do you say to that? It's pretty aggressive.
Look, it's pretty aggressive, but I think this is the new regime we're in 23. I guess ultimately what we're seeing is where a party's defaulted on a payment arrangement, you can still get another payment arrangement. But I think what's required now is, a really good story, and it needs to be substantiated with documents where the ATO need to act reasonably. So, and it's not a horse trade. You can't just sit there and say, we'll pay 12 and let's move on. You need to sort of, I think through documentation, it might be a forecast of the next 12 months to engage with the ATO and probably a little bit more formally by way of a letter. Here's a budget. We can afford 12 grand. This is how we get to it. We just, for whatever circumstances, we can't afford 16, and maybe it's reasonable to extend an 18-month payment period to 24 months or whatever. So sort of, it depends on the sort of circumstances, of course, but I think it needs to be formally put to the ATO, probably in writing now, with a little bit more documentation to back it up. That's what we're seeing certainly in Hall Chadwick with at times these sort of slightly more aggressive approaches.
So from let's call it a bit of a scare tactic, and looking at that as an example, is it better off if the business can't afford the 16 and they're saying, well, you need to come up with it, or we're going to issue with a DPN? And I didn't finish the story a little bit when I should have. And if you can't pay that, well, then we will issue a notice to wind you up. That was the part of the conversation. So that's pretty strong in its.
Yeah.
So are you saying it's still okay to, if you default on your payment arrangement, then
I think
work through a new arrangement with a set of financials. So give them data, have that conversation, put it in writing, because this was just a phone call.
Yeah, and that's where I think documenting things, request them formally not to take any further formal debt recovery action, whether it's a DPN, and also because I'm no longer practicing as a tax lawyer, but have some useful tax lawyering skills in my little bag of tricks. Procedural fairness is an important thing that is governed by the Australian Tax Office Charter. Ask them to act reasonably, be procedurally fair, because ultimately a payment arrangement is an administrative decision under the Tax Administration Act. So sometimes, you know, and it's useful just to remind ATO officers who may be having a slightly, you know, aggressive conversation with you, just to remind them to be fair and reasonable, respond to the documentation that will be provided, and if they've got any questions, seek clarification of it. So it's a fine line between an aggressive response to an aggressive action by the ATO, but also going over the top. And I think that's probably, you know, I've always found in the dispute work that I've done over many decades that if you are measured and reasonable and it's substantiated by adequate documentation, a reasonable outcome is normally had in a pretty efficient time. And you don't need to go overboard as well. You know, it just needs to, for in your particular circumstances, we can afford 12 a month. This is why. We can't afford 16. This is why. And we're hoping that the range is going to be between 11 and 13. So we think 12 is a reasonable number. You know, having that sort of dealt with is, and sometimes, you know, it can be that, you know, using a firm like us to do that type of discussion and negotiation, that can be useful. It just depends on the circumstances. You know, sometimes we have clients come to us who have been doing their own payment arrangements and they need us to sort of step in and just sort of step up the formality of it. So they're sort of, you know, just some of the observations you can make.
And to everyone online as well, just sharing a little bit more about this case, because it is, call it pretty hot if you haven't had the opportunity to, or clients and been in that situation as well. It came through as a text message to say, please answer your phone in the next 20 minutes from an unknown number. And then the unknown number came through. Now, with nowadays security and data breaches and all these sorts of things, you know, the first thing I said to my friend was, what's it actually the ATO? Like, how do they identify themselves? How do you know you're sharing all this, what you would deem as to be information, which is interesting. So the first line is a text, then followed by a phone call.
Can I just give an example of why I think there's been a 23 is going to be the more aggressive approach to compared to last year? If I can just share screen, Paul.
Sure. I've
just got a slide that I think's useful to share. This is, I think, one aspect of your question you've always got to be mindful of, and certainly the audience needs to be mindful of, is this is a diagram that basically sort of summarizes, I think, the zombie debt. So the purpose of me just showing this afternoon is to make sure, it might be a new client, that you're not dealing with what the ATO describe as insolvent debt. So if I can just sort of, and maybe Paul, we can get someone to shoot this slide out to people, because I think it's a good, useful reminder. So this is the total ATO debt book. This is why they're becoming more aggressive in 23. So the total ATO debt book, 61 billion. Of that, the ATO, and this is at January 22. So this is a slightly old data set, but it was given in October 22 by the Deputy Commissioner Hirschhorn. And basically, of 61 billion, the ATO reckon 24 is going to be uncollectible. But importantly, of 61 billion, somewhere between 6 and 9 billion, the ATO is saying is insolvent debt. So I call that zombie debt. So you can sort of see what happened in 22. They started issuing director penalty notices. What happens in 23? They have to start winding companies up and making directors insolvent to try and sort of negate the growing insolvent debt that they're never going to collect. So I think that's a good sort of, and it may be that's useful to some people to share with their clients when they've got to perhaps have an awkward conversation about what what are your current debts of the company. Are you that unusual case where you might actually be insolvent? It might be that this is the end. So I think that's obviously an extreme, and the extreme situation, not necessarily your case, but I think that's a good illustration of why the ATO being more aggressive this year. And the reason they're being more aggressive is they've got a big debt portfolio to collect. It's only getting bigger because of 10 interest rate rises. So those stats, that's 61 billion, that's before 10 interest rate rises last year. So they've got to be a lot more firm at collecting debts in 23 and obviously next year as well, because of this large portion of their debt book they know they can't collect. So I guess being reasonable, putting the documentation together for a payment plan, seeking some sort of procedural fairness in the decision-making process, and just trying to be firm with a slightly aggressive approach without being too aggressive. I think that's the keys to negotiating the non-issue of a director penalty notice. Back to you, Paul.
Thanks, mate. Really appreciate that. That's just really, really, really good information there for everybody online to actually continue to think about and share with their clients. I think it's really important. Again, if you've got any questions, please drop them into the Q&A. Let's get on to tax disputes, mate. What can we expect to see in 2023?
Yeah, so I think one aspect which obviously I think has been quite well publicised, certainly in 22, is trust audits and what the ATO are going to do with their rulings and PCG guides they issued last year in relation to trust audits and how distributions are going to be determined. So I can sort of see that increasing in frequency. Again, if I'll just sort of show a slide as to why audits have to increase this year, and it may be it's only going to be after 1 July. I'll just share my screen, Paul, just to show you another slide which I think's useful. So why do audits have to increase? Well, if the little blue circle, Paul, you can see that slide, okay?
Yep.
Yeah. So if little blue circle is the tax debt that the ATO have got, and as we know, what happened in 2020 and 2021 is the government handed out hundreds of billions of dollars in JobKeeper and cash flow boost. The only way the ATO can collect more debt, or the federal government can collect more debt, there's three things they can do. They can introduce new taxes, and this is the sort of significance of why audits are going to increase this year, and why I think trust audits will be obviously a pretty important target. So the ATO can introduce new taxes. Okay, they can put the GST rate up. That's not going to happen in the current climate. There's very limited scope to introduce new taxes. People will be familiar that the state government introduced foreign persons tax for foreign persons for certain duty and land tax. So that's a good example of a new tax at a state level. But on a federal level, I can't see any new taxes being introduced. We obviously wait for the May budget to get further feedback. That'd be the case. Alternatively, they can increase the tax rate. So a good example we saw a couple of weeks ago was the superannuation potential whack that's going to happen after the next federal election, where superannuation taxes on balances above 3 mil is going to be hit with a 30% tax. Okay, that's a good example of a tax rate. That's not big bucks though. That's I think the ATO is saying, also the government said that's $2 billion. So really the only way you can get from $61 billion, and you'll appreciate the federal coffers, the federal budget's about half a trillion. So 500 billion is probably the basic sort of rolling number that goes from year to year. So the only way you can increase the available debt to pay for all our wonderful goods and services is to audit. That's the only thing the ATO have got. So what we're going to see is increased audits. Why? Because last year, 20 and 2021, very few ATO audits. The ATO didn't have the resources. They were clearly in preservation mode. Let's keep the economy ticking over, handing out JobKeeper and cash flow boost. So I think I might just stop sharing slides. I think what you'll find is this year will be and I think it started in probably June, July of last year. Audits are going to increase. And I think the thing I can sort of see is obviously trust audits are going to increase because I think that's a fertile area that the ATO can see that they can collect more money from the medium to high net worth individuals through trust distributions. So that's and they're going to do it through two main anti-avoidance measures, either Part 4A or this ordinary family and commercial dealing provision in what's called Section 100A. So that's probably not time to go down that bunny hole, Paul, but that's probably going to be the main armory of the ATO. And I guess one thing I've sort of delighted since I've been at Hall Chadwick is being able to resolve these sort of audit disputes quickly, efficiently, and with minimal fuss. So I think that's probably the one thing for the audience to be mindful and look out for is trust audits that will increase, I think, over the coming sort of 6 to 9 months.
Yeah, good. And then based on what I saw this morning, there's about a $200 billion we're going to have to find as well, based on what they're doing in the UK and the US as well with submarines. So interesting time, isn't it?
Yeah, look, it is. And I think there's a backlog. So if I could just briefly go back to directed penalty notices as well. I read my first case last week, actually, on a Western Australian directed penalty notice case. And it was interesting that the tax debts were pre-COVID debts. So that says to me, there's still court cases in the system that relate to pre-COVID type tax debts that exist, and the court case existed pre-COVID, and the ATO haven't gotten through the system yet, which really goes back to the proposition of early resolution, early intervention, resolve either the disputed debt or the non-disputed debt as quickly as you can. Is probably the most efficient and practical sort of skills that we here at Hall Chadwick sort of believe are important, and look after our clients using those sort of themes.
Spot on. And again, hard to believe that we were talking yesterday with some friends, and it's 3 years now. So 3 years, because it was the Grand Prix weekend. So we're coming up to that as well here in Melbourne for the GP, and it's hard to believe it's been 3 years. So interesting that what you just said there in terms of that old. So, mate, as we look to wrap this up, there's probably two key things I would just want to continue to chat to you, which you can talk about, delve a little bit deeper into, if that's okay. And that is to take everyone through the latest technology investment boost. And then we'll talk as well about the Australian digital games tax offset, if that's all right.
Yeah, sounds good. Look, I might spend a bit more time on the first measure just because it has broader appeal, and just sort of tack on digital games tax offset at the end. So both of these measures, importantly, are currently before Parliament. The legislation hasn't passed, but it should pass either next week or the week after. So this is sort of hot off the sort of press, and hopefully within the coming weeks, let's assume the legislation passes next week, we'll have a Hall Chadwick flyer that we can send around to your audience, which will summarise some of these draft views. I'm not expecting any major change, but as you say, whenever legislation is before Parliament, the experienced practitioners in the room will always say, you never say never. It's always the best thing to do, but I'm not envisaging any significant changes, and can I say, for my sins, I actually monitor the legislation going through, and the amendments that have been put up the flagpole, Paul, aren't identifying any significant changes. But we have an interesting Senate, and the Senate seemed to have a little bit more power, so that's probably one thing for people to be mindful of, that it's not a done deal, new measures, until it's signed, sealed, and it's passed in an act of Parliament. So with that in mind, I think the technology investment boost has it's not a significant material item for each individual client, but it's got broad appeal. And I think that's why I think it's probably one of the most important sort of new tax measures, because effectively it's a bonus tax deduction for digitising a taxpayer's business. So it's quite broad in its appeal. The bottom line is, if you spend up to 100 grand, you get a bonus tax deduction of 20 grand. So again, it's what they're trying to do is pump prime the spending side of the Australian economy, and it's available to all taxpayers who are businesses, of course, with a turnover of a maximum of 50 mil. So that's basically the entire small business segment. So it's going to have, can I say, quite broad appeal. Noting that it's only going to be an additional 20 grand, which depending on the tax rate will depend on the sort of particular savings. But the reason I think this is important is because it actually applies to the last financial year as well. So when the rules come out, this is not going to change. So it actually includes expenditure incurred in the period 29 March 22 up to 30 June 22. So, and people will be preparing tax returns now. And so it has a direct impact of people working right now. And it also relates to the current year, so the year ending 30 June 2023. So there's 2 financial years. And the only unusual, I call them, sometimes tax rules introduce things called odd socks. This is from the odd sock drawer, Paul. We don't really know, because the ATO obviously haven't published any views, as to how the measure is going to apply to the last financial year. So the last financial year. So there'll be people in the audience who are preparing a tax return today, that they'll have to just sort of make a file note to say, hey, this needs to be looked at when the rules are passed and the ATO have explained how they're going to administer the bonus for the 30 June 22 year. And generally speaking, the test, Paul, is the expenditure needs to be wholly or substantially for the purposes of digital operations or digitizing your operations. So that's like the sort of test. That's quite a pretty broad. Some of the examples in the EM, digital enabling items, computer, telecommunications, hardware, equipment, software, digital media and marketing, certain e-commerce type events for things like portable payment devices, and obviously the cyber security, so money spent on cyber security systems.
And the interesting part about that, sorry to interrupt you, is that because we've been in COVID, most businesses would have been forced to go that way anyway. So we've been forced to become more digitized because we can't touch people.
Yeah, correct. So it's a bonus. It's only an additional 20%. So maximum bonus, 100 grand is going to be an extra 20 grand. Obviously, 50 grand will be 10 grand and so on. Yep. But it has broad appeal. Like all businesses turn over less than 50 mil. So that's currently for the Parliament looking to be passed, I think, next week or the week after. Like it should have been passed. Like I was hoping it would have been passed by today, but it got bumped at the last minute last week in the Senate. So as these things do. But importantly, I think the real theme is with your current tax returns being prepared for 30 June 22, live issue now. So that will keep clients happy, I think. Where you're eligible, and the money on the digital operations of the businesses was carried on certainly in the last financial year, 30 June 22. So I think that's a pretty important message, and we'll have a good summary that will be sent around, Paul, over the coming weeks once that legislation is passed.
Brilliant. That's actually a good one to keep at the back of your mind, that's for sure. Let's talk about, mate, the digital games tax offset.
Yeah, look, I think this is a very specific, but there may be a handful of people in the audience who have a certain client type being game developers. So it's very specific. This measure is probably the first thing, and the majority of people in the audience probably don't have game developers. But this is a measure that's at least 10 years old. I think the industry has been wanting this measure. And if you think about it, it's really a incentive scheme that we've had for the film industry, but for games. Whether you play games on your computers or on a console, this is an incentive measure that is going to basically boost the Australian gaming industry, like the film industry, say for example in Surfers Paradise. But all over Australia again. So it's very, very specific, but I think that the financial importance and value of it should lead to increased economic growth, increased employment, and ultimately it's probably long overdue. And I know from what I've been reading about it, it's an important measure. Okay, so how does it work? Just very, very briefly, must be a game developer. So a company must be a game developer. And the game developer must produce digital games and not gambling. So gambling games out. And the only real limit is a $500,000 initial limit on game development. So 400 grand, you're outside the system. $501,000, you're in the system. And the really attractive nature of this incentive is, as it's currently drafted, I'm not envisaging any major changes, it's a 30% offset. So, and it's a refundable offset like the R&D tax offset. So where you have a digital gamer and you've spent $500,000, you're going to receive, up to say, 150 grand in refund. I'll probably use it. Let me use this example. If a company's income tax expense just generally is 150 grand, if they spend $1 million, 30%, 300 grand, that digital games company is going to get a refund of 150 grand. So that's sort of, you can see what that's going to do. It's going to really super drive the Australian economy with game development. Saying that, it is a little complicated. Like I won't say it's. I have done a simplified version. There's qualifying expenditure, and there's plenty of rules and tripwires that you need to look at. So it's going to be just another variation of R&D. My view is, and I look after our R&D program within the firm. R&D is largely a very specialised area that, unless you're doing sort of biotechnic type sort of research and development, if you're on the edges of what's possible, then you've really got to get special advice to make sure that you don't fall over. So generally speaking, this can be a good measure, and it looks at all expenditure up to the point of the lodgement of what's called the classification with the Office of the Arts, which is a federal department where you actually get your game classified as being, PG, or can I say, if it's slightly more graphic, it might be on the other end of what my teenage son is no longer allowed to play probably ever. So you've got to be, there's a classification process that will fit into the administration of this digital games tax offset. So again, it's in legislation before Parliament. It's probably one of the most important new, I think, incentive measures in recent years. It's good policy, and watch this space. I think within a month it will be passed, and again, it applies to the current year. So a digital game company that's incurred expenditure in July of 22, that's in the system. So it's an important new measure for the Australian economy, and I think, like R&D, it's something that is really, it is a bit of a specialist area, just given all the different rules of being eligible and ineligible expenditure, very similar to R&D.
Yep.
Back to you, Paul.
Beautiful. Thanks, Brett. Whoever's online, which is brilliant to see, all of you guys are still there. If you've got any questions, please throw them into the Q&A. I've got a question for you, Brett, before we look to actually formally wrap up. R&D and the digital games, could you qualify for both?
You can, but unfortunately no double dipping. So can I say that? And that's why I sit there and just go, the rules they've been very well thought out. They're probably a little bit overcomplicated, but there's even rules about, am I allowed to subcontract my you appreciate it's going to be largely for employees and contractors. There's even anti-avoidance rules for how you can contract. So the contractors need to be Australian residents. Quite often games are developed over in Vietnam and offshore. So can I say they're out, and you appreciate it. It's there to further develop the Australian industry. And so again, it's certainly, I think, using the R&D umbrella, it's another R&D type measure that requires, I think, specialist advice. You've got to be careful when you do these types of things, especially in its introduction. You don't want to receive an incentive and then suddenly go, oops,
yes,
I've overclaimed the incentive. So
yep. So based on that, there's no questions. Before we wrap up, how do people find you if they want that advice?
Yeah, sure. Look, so I'm in the Sydney office. Go to our website. I'm delighted to help, whether it's in any tax advisory projects or any disputes. It's been delightful to chat to your audience this afternoon, Paul. Thank you for the invitation, and look forward to speaking at another opportunity.
Brilliant. Thank you. It's our pleasure. And obviously, anyone that wants to reach out to Brett directly, he's on LinkedIn as well. So if you wanted to reach out, chat to him as well, or obviously contact the Hall Chadwick Sydney office and they can put you in touch with Brett as well. So let me just check to make sure there's no questions. There's nothing coming through, which is great. But if you wanted to send anything through to us and we can send them through to Brett, or if you want to contact Brett directly, we're okay with that as well. These are for you guys. So hopefully you've been able to get something out of it. Certainly in a quick 36 minutes, we've been able to get through what I would say quite a lot, which is fantastic. And there's obviously some other things that still need to be passed, which obviously once that happens, we'll get that information to you as well. And those slides, we'll make sure Danielle gets that to you as well. No questions?
Very good.
Mate, we'll wrap up. Thank you very much. Thanks for joining us.
Thanks, Paul.
Mate, your wisdom, your knowledge, your advice, absolutely fantastic. So thank you to all of you that have joined us. A massive thank you. Now, I have got my next Empire Masterclass show. It is happening on April 20, and we're going to be going into the top 10 reasons around security, digital security, and I've got a CEO that I'm interviewing on around all of those topics. So if it's something that I know following Optus and Medibank, it's still very much a part of what we do every day and how we need to not only our own practices, but at the same time, we've got to talk to our clients about that as well. Data breaches is something that are happening far too often, and there's a lot of scammers out there. I know I get a text message and an email, actually. I think I'd probably get one every day. So you've got to be careful what you do open and what you don't open. So that's my next show. It's on April 20. You'll get an invitation soon anyway. Brett, thanks again, mate. Have a wonderful rest of your day. And to everyone else, signing off till I see you next time.
Thanks, Paul. That's great.
Thanks, Brett.